I find that interesting. And then I also think like just the amount of quality open source models that are coming out is great for decentralized networks because we can now run those models and they have real demand. So, you're seeing inference as a service companies like Together AI achieving like insane revenue. Like I think it's like 300 mil ARR they're projected by the end of the year. And decentralized networks are just really, they can offload that demand, which is rising. So that's really interesting on the inference side.
What's up, everyone? Welcome back to Shoot the Shit Pod number 17. I'm your host, Matthew Nay, and I'm joined by the enterprise team here at Messari with Corbin, Sam, and Chris. Today is December 4th, and we're going to look into the State of AI report that we launched earlier this week. Some look at the Monad launch, kind of looking at how it's been this last week and a half. Also look, where are we in the cycle? Is the 4-year cycle dead? Are L1s overvalued is the hot topic of the last couple weeks. And then we're going to wrap with some launch pads and Solana and some, the decentralized capital formation happening with the wet token around the prop AMM humidify. And then, as always, what are we doing on chain? But to kick things off, I'm going to kick it over to the author of the big State of AI report that we released, Chris. Talk about what the key findings. Where is AI? Is crypto AI still a thing? Are we in an AI bubble? What's going on with NVIDIA's earnings? No, I'm just kidding. But yeah, what were your key insights from the State of AI report?
I don't know if I can speak too much on if we're in an AI bubble or not. There's a lot of discourse around that. Not sure who's right there, but I can definitely talk about decentralized AI. I think that like the overall finding I had was that there are trends that are accelerating in traditional AI that are impacting DAI and kind of pushing it into its next evolution. So I think a lot of people, obviously we had like the agents narrative, it was very kind of like, not a ton going on underneath the hood, a lot of narrative, a lot of hype, not a lot of substance. And I think we even had that with the compute protocols back in early 2024, where it's just kind of tracking NVIDIA. Like every time NVIDIA went up, these protocols would go up. It's kind of like a classic, like something in TradFi happens and then it's reflexive in crypto. But now I think there's multiple areas that decentralization and what we can provide is actually of value to the more broad AI industry. So I think one of those is we're entering into this kind of like post-training paradigm where reinforcement learning and test time compute is one of the primary ways to scale. And unlike pre-training, it can be done asynchronously, and then so all these different nodes can do it, and then come together for like the result to actually update the model, which is just vastly different than the paradigm we were in before, and just lends itself to decentralization more. And I think that we're seeing that show up in a lot of the DAI labs like Prime Intellect, Jensen, Pluralis, Naus. We're able to train way bigger models, like post-train these open source models. I think Prime Intellect just put out one that's like 100 billion parameters trained in a decentralized fashion. So lots of advancements going on over there, tons of releases, tons of research going on. I think also we're seeing inference demand spike pretty heavily, and it's going to continue going up, right? I think it's like by 2030, 50 to 75 of the new compute demand is actually going to be coming from like demand for inference. And that's for multiple different reasons. Like, obviously we have reasoning heavy workloads now, accelerating consumer demand at a global scale. And this positions decentralized compute networks in a really interesting way. I think it unlocks new structures. So like, for example, one of the companies, 42 Network, I really like. They're a company that runs inference by basically like a swarm architecture of people running small models on their own GPUs and consumer devices, which can then come together and kind of like through a judgment reputation system come to better answers that are the output of that inference. So they've been putting up some really impressive benchmarks. I find that interesting. And then I also think like just the amount of quality open source models that are coming out is great for decentralized networks because we can now run those models and they have real demand. So, you're seeing inference as a service companies like Together AI achieving like insane revenue. Like I think it's like 300 mil ARR they're projected by the end of the year. And decentralized networks are just really, they can offload that demand, which is rising. So that's really interesting on the inference side. I think on the data side, what we're seeing is like, the public corpus of text is obviously very close to exhaustion. There's a ton of other data out there, though, and we're seeing these labs, like especially as you start to push into frontier use cases like robotics, world models, computer use agents. A lot of this data is very difficult to collect, and there's not a ton of public data out there to source from. So it's very different than like, pre-training a model off of like all of the text on the internet is publicly available. And decentralized networks can coordinate human beings at scale to actually collect this data and then basically gather it into a data set, which can then be sold to companies. So we're seeing a lot of companies that are focused on this, that are generating really solid revenue. Brass, I think, just posted up, I think it was like 25 mil for Q3, or maybe a projected 25 mil for Q4. I'm not exactly sure, but there's a lot of companies like this where behind the scenes, they can't really talk about the revenue just because of some of the agreements that they're in with bigger labs and bigger companies, but they're posting really good numbers. And I think that that is an area that just being able to coordinate that data gathering is massive. And I can see a lot of revenue and a lot of demand flowing into these companies. And then third, I think one of the huge things that we've seen over the past couple months is agents and crypto rails being an optimal infrastructure for agents to actually transact on. So even though, commerce only makes up a small amount of like current model use, for example, like people who are using ChatGPT, that's going to grow a ton over the next couple of years. I think it's like, I forget exactly, McKinsey's projecting it to get up to, I think, like 1 trillion in the US by 2030. And when you think about that model, like, they have like, first off, commerce that is just classic e-commerce. I want to go and I want to buy a pair of skis for my next vacation, right? I can do that over credit card, right? Like that's not a big deal. Like, sure, I'm going to eat the interchange fees. That's fine though. But when you start getting into like streaming demand and like usage based, so whether that's like you need to acquire specific data, right? You need to acquire compute, you need to like trade, something like that. Then you start getting into these kind of micropayments, which crypto rails are really good at facilitating. So that's very interesting to see how that's going to disrupt commerce more broadly. I think we're already starting to see a lot of use there, like more experiments going on with X402. It's very early, but I mean, even, Google's adopting X402 as something that you can plug into like their AP2 standard. So a lot of really interesting stuff going on there. And I think like as that, commerce continues to go more agentic, we're going to see a lot of use case there. So I think those are like the three big areas. Another one I would say is like Darwinian networks. So networks like BitTensor, networks like Numerai, networks like CrunchDAO there's really impressive results coming out of those. Like JP Morgan invested, or I think has a commitment up to $500 million into Numerai. So that just shows that like the traditional capital is actually seeing the results of this and saying, hey, this is something I'm willing to take a bet on because we believe that this could actually outperform over the next couple of years. So yeah, lots of interesting stuff going on. I think we're seeing this big transition from like narrative-based AI stuff with not a ton of substance there to real demand coming in and, real use cases, DAI being able to provide something to the AI industry. And then also, obviously, with all of this coming together, you have the DAI ecosystem as a singular network starting to become more holistic and like end-to-end decentralization becoming a lot more possible. So I think it's super exciting. I think we're going to see a lot of stuff over the next year. 2 years come out of this. And I think it's going to catch a lot of people off guard because a lot of people are still kind of pattern matching it to the more narrative driven runs we've had before.
Yeah, no, that's super helpful. I think we can kind of go step by step and kind of see where we are. So you started talking about inference, and so when you're talking about these decentralized training inference companies, like how big are these models? What's how like relative to the state of the art ChatGPT, Gemini models? Like how much are we actually doing? Is there any like consumer chat boxes that we can go use that these models are trained on or actually like powering? And like are there anything like anything I could go and touch, or like is it still kind of in the development land and like you said, like maybe 1 to 2 years out before the decentralized training actually clicks from like a consumer or like more of a use case application perspective?
Yeah, so I think there's two ways to separate it. So you have the inference side of it more as like inference as a service, and then you actually have these models that are being trained. And like the RL, like they're able to do a ton of rollouts asynchronously and then like post-train these, like Chinese models that are like 40 build parameters, right? So you can go around and play with some of these models. Like Noose has a model out. I think Hermes 4, I think it's like 40 build parameters. Prime Intellect has one out. I'm not sure if they've actually officially launched the 100 build parameter one. I think they have. So I think you can go play around with that too. And then I'm not sure if Pluralis has theirs for consumer use yet, but there's a couple that you can kind of go play around with. So that's on the training side and some of the stuff happening with decentralized training. You can go, again, like you can go use those models. On the inference side, we're seeing some real demand come in. So both as inference as a service and as GPU as a service. Like IONET, I think posted 20 mil revenue so far. That's all on chain. So that's pretty interesting. You have other networks that are pre-TGE or like maybe going to release a token, but also doing like things in decentralized fashion. So like Protea is doing really well on the inference side for like video image generation. Hyperbolic is obviously doing incredibly well. So I'm not sure if they're going to release a token or not, but just proof that like these networks actually really do work and they're seeing real demand.
It's nice. It's kind of like, it sounds like everyone's kind of filling the narrative side of piece with the actual like quantitative side of the story recently on that side of thing. That's cool to hear. Let's going over to the data side. Ray, I wrote a Shaga report, and I remember we were talking about this a couple months ago as we were talking about like the whole data side, right? Like you could start creating synthetic text data pretty easily and training models on that. So like that obviously that market of just collecting text data is going to get pretty saturated and commoditized pretty quickly. But there is a lot of like real world human data. You touched about like robotics, and so like touch on that a little bit more. Like what is the, obviously with Shaga, so it's a decentralized cloud gaming company. They're using like basically their whole thesis is you have the hardware under your desk, the gaming PC that already can run the games that are then the pixels are then just sent over the cloud to your phone or wherever you want to play these AAA games. But they're actually able to collect that data of you gaming, and that is actually very valuable because when, like, let's say you're playing Black Ops on Nuketown and you're playing against bots, like you want some real world feel behind that. So yeah, what's the state of that, and like why is that kind of an interesting moat in the land of AI that like maybe Web3 these decentralized protocols kind of have a little bit of a niche and kind of a wedge into the data collection side of things?
Yeah, definitely. So, I mean, I think just going back to the tech side as well, you have some companies like Prime Intellect, for example, they do like training runs or like gathering data for different synthetic data sets that can be used in post training. So you have like very specific, like, question answer pairs for like mathematics, right? And like coding and all this stuff. But on the side of something like Shaga, it's really interesting because there's a lot of different things that go on or go into training like robotics or training like world models, right? But basically you want them to have like a sense of like physics, a sense of the world, like some sort of action plus an actual like input or like understanding of what's going on. So with Shaga, for example, like you have these gameplay action pairs, so you have the actual frames itself in addition with the user action, which is very informative. And we've seen like in the past, like I think OpenAI tried to acquire a video game company for like, I think it was like 500 mil. I know Microsoft, they trained one of their world models a year ago on some video game data. And there's a lot of different use cases for this. So again, like world models can help a lot in like embodied AI and like them kind of like understanding like the spatial temporal place that they need to move in and like actually take action in. And then you also have stuff like gaming, for example. Like you have models that can generate games on the fly, and I think that's going to completely change the gaming industry as well. But yeah, I mean, these networks like Shaga, like they're able to collect so much data from so many different people all around the world, and like that is all accruing to an underlying data set, right? So then you can just monetize off of that. That's one way to approach it. And then you also have networks that are just using token incentive models. So just like classic token economic stuff, incentivizing data connection. Like you have, Grass that is basically like utilizing your bandwidth to gather data, and they can gather like bespoke data. So for example, a company can come to them and say, hey, we need this type of video data. They say, okay, cool. We have all this bandwidth. We can, basically acquire the data that you need and then sell it to you. So there's a lot of different ways to go about it. But I think like really what we're seeing is like the tokenomics model, and then also something like Shaga where you're a compute network, but you're just sitting on all this data for a very specific use case, and so you can then go and monetize that.
Nice. Yeah, I hopefully that might like kickstart like maybe Web3 gaming, or like just kind of continue the trend we're seeing in gaming, where like indie gaming is really taking off and competing with these AAA games as they take 30 years to release GTA 6. But I think that's going to be pretty exciting. But Sam, feel free to chime in here. I know you wrote a report on X402 a while ago. in collaboration with some guys over at Coinbase. But talking about like the agent payment stuff, like you talked about like buying skis or like how close am I to being able to like maybe not talk to Siri, but like talk to an agent of some sort and be like, is it really just saying like, hey, go swap for me? Or is it, or we get to like kind of close where like I can use maybe not X402 specifically, but just like agents in general to be like, hey, go buy me the best Uber from this place to this place, or like go and go buy this gift for Christmas or something. Like, so where are we on like the actual like use cases of these agent payments?
I think it's really like agentic payments. Like we have a lot of consensus. I think that that's where things are headed. At the same time, like it seems like a very far away future just because no one really wants to trust an AI agent today with its money or with your money. So for like example, I think that's why we kind of saw like the dev AI trend start and then like kind of fizzle out because people were like, no one's actually trusting some agent that like anybody could externally could just like inject a prompt and get the agent to do whatever they want, you know, like it just doesn't seem safe yet. Right. But there's also a world where, and this is kind of something like I'm exploring within like the world of like crypto neobanking and all that. But AI agents represent like a new category for credit demand because unlike human borrowers, the agents can be programmed to follow strict debt covenants. Right. So it's kind of like the difference between like deterministic behavior and discretionary behavior. We know how an agent will react in like certain situations, right? We program that. It's very different from a human. So I actually think that there's a world where like agents have lower credit risk and are able to borrow more money than humans on chain. And I think that's super interesting and opens up like a world of new opportunity. It's something like 3Jane has like discussed exploring. No one's really like taken it to the limit, and I don't think anybody will because like today there are no agents that are going to get like lower credit risk than a human. But I think that's like a potential future where we're headed.
Can you give me an example of that, or like why would an agent be borrowing like compared to a human? Like, are they like in what scenario would that like borrowing without collateral? You mean, or
I think, yeah, I mean, like this could be like for unsecured lending, right? Just like getting like a credit line.
oh, I see.
But I think in this scenario, like the agents, like it's doing everything that like a human would, right? But it's like it's almost acting like a proxy for you, or maybe that's like your new wallet in this instance, right? It's like managed by an agent, so it essentially creates these like parameters that like the wallet can act within, but it's completely programmatic, right? So I mean, like I think it's anything that like a human would do with a credit line, right? Like they can go trade, they can go farm. It could be a business that needs like a new credit line to operate, and they want to be like value based off of their like cash flow, things like that, right? So like this is already like $1 trillion market in like the U.S., right? I think like globally the unsecured credit market is something like $5 trillion. So it's just such a massive opportunity, and like clearly people want like the unsecured lending. I think it just it's interesting to imagine what that looks like on crypto with like these agentic barriers.
Yeah, that's interesting. That's why I asked.
Are we seeing any of these like legacy companies come on chain with the agentic payments, or like what does the Web 2 stack look like compared to like the Coinbase X402 agentic payments?
I think we're seeing companies like Google and Cloudflare and like Shopify and Stripe all rally around it. I don't think anybody has a very clear direction on like what use case will like hit first. So from like the infrastructure level, like the picks and shovels, they're just willing to support it all, right? Because they want to capture that new demand, which I think is smart. But yeah, I mean, like my guess is that like agentic payments will be very under the hood. Like you won't necessarily know how that like the LLMs are involved, or you won't like see it on your computer screen. It'll just be very much like kind of this machine to machine payment, like the ultimate abstraction of crypto, right?
Yeah, and I think that there's different reasons that X402 is like better than your traditional card network, because again, like you can go on ChatGPT and like use ACP, right, to go purchase something with your credit card because you have like your credit card details that you've uploaded, and you're like, hey, find me the best XYZ. It comes back and it says, hey, this is what I found you. Cool. Do you want to pay for it? Cool. Talk to the merchant. Whatever. Deal's done. But the X402 thing, like kind of as Sam's saying, for like agent to agent payments, that's where it really matters. That's where it shines. I also think like, again, if you're trying to, again, this can be agent to agent as well, but like if you're trying to get some sort of like data set, right? That you might need to make a decision, like, and that data set costs you, I don't know, like 40 cents to acquire. You're not going to use a card for that, right? So like that's more where that starts to shine. And we'll see. Like if usage-based payments really takes off as a model and starts to eat a little bit into some SaaS stuff, then I think that is a totally different ballgame. But that's still very TBD. And like people are kind of figuring out how, I guess, yeah, payments for software are going to work within the next couple of years.
Nice. Do you think that could kind of like kickstart the trend? Because I've always thought, right, I think a lot of people have, where micropayments is a killer use case, or just streaming of payments is a pretty killer use case. Is that kind of like where that might start? Is like, hey, if you're just like streaming payments for using data like hourly or minutely, like, or like per minute, is that being explored at all?
Yeah, I mean, I think usage-based payments are common in some ways. So, like for example, like if you're doing inference, right, and you're like, hey, I just want to basically be able to plug into this and like pay per usage on the back end when someone accesses my chat, and I'm like paying whatever company I'm using for that, and again for data as well. I think when you start to get into other sorts of streaming, like for example, can I do a usage-based payment on Spotify, right? So that like I'm only paying for like the actual listening I'm doing versus a monthly subscription. That's where it gets a little complicated because like I think businesses in general, it's better for them to have a SaaS model because you have very predictable revenue that you can model out, and that just helps you a lot on the business end. And I think also for certain consumers of it, you also want that so that you can model out, like if I'm using like Salesforce or something like that, I want to be able to model out my spend till the end of the year. I'm not even sure how that would really work with Salesforce. Maybe like I think there's some people experimenting with like outcome-based pricing models, but yeah, it's very different from use case to use case. And I think like breaking down the subscription business for some of these companies that are like it's very entrenched for them, like a Netflix, a Spotify, like I kind of find that hard to believe that will happen. But I mean, we'll see, right?
Yeah.
I think it makes a lot more sense B2B than it does B2C. Like we've seen like the B2C models where like for example with data on your phone, people much prefer to just buy unlimited data than to buy like an individual package, right? Like they could look at how much data they use monthly and they could try and estimate like how much they'd want to buy in advance for like the month of like, like how much like data am I going to need? But they don't. They'd rather just the convenience of choosing to buy the unlimited package. And I ultimately think that like when you look at consumers like that, like most are pretty fee insensitive, whereas the merchants are very fee sensitive. And this micropayments thing kind of like flips that a little bit. So I ultimately think that like the best situation for this is going to be like two fee sensitive users, which makes me think that's going to be like B2B.
Yep. No, yeah, I think it's like a chicken and the egg problem, right? If you're a business, you also need like all your providers, all your customers to also have the same inputs to be able to decide, because you gotta have money flowing in to send money out. And so like if your customers or whatever your whoever's getting paid or whoever's paying you, if you're only getting paid every 2 weeks, you can't be sending out money every second, every minute, every hour or whatever. But yeah, no, go check out the State of AI live on Messari's website right now. Chris and co did a killer job on that. But let's change gears a little bit. Week and a half ago, Monday of last week, we had a big L1 launch, Monad. To set the scene, a couple weeks ago, they did a ICO on Coinbase, first ever ICO on Coinbase's platform. They were selling about 7% of the token supply and raised over $187 million. It was oversubscribed a little bit. There is some FUD on the timeline. It took a little bit, but the incentives were to just wait until the end, and it got to about like 260 million in commitments. But and then they had a 3% airdrop, so the circulating supply is about 10%. Launched at about a $2.5 billion valuation, which is what the ICO was priced at, and which was interesting because the last round that the Monad Foundation did earlier this year or last year was about a $3 billion valuation quickly after launch. In a couple days, ran to just shy of $5 billion valuation, a $500 million market cap. And then just because of market conditions, post-TGE airdrop supply unlocks and just people like all the selling pressure, went down to less than 2.5 and now is sitting at right around $3 billion. We can go and kind of look at the DeFi Llama metrics. It's about 190 million in DeFi TVL, just shy of 500 million in stablecoins, And so first, I'd like to see what your guys' thoughts were on TGE, what you thought the ICO did, what did the team do well, and then we can kind of get more into the conversation of like, do we need an extra L1 and kind of get into that conversation. But at first, let's just talk about it specifically, just about the TGE and what you guys thought went well.
I think they did a good job marketing. They're like clearly, very, very killer at that. They've done a good job for the last couple of years, like just building a community pre-product, pre-launch. So I think like from the ICO perspective, like I'm not surprised that they were able to like raise a large round. I think that like where they're going to struggle is translating all of this hype into like product market fit. And I think that that's probably just going to take time, right? Like the L1 scene is just incredibly competitive. We're seeing like a lot of debate on how to value L1, saying they're kind of like it's apples and oranges. Like can't really just like pattern match like a PE ratio onto it. I think that like it's a little less apples and oranges when it's like Monad versus like Solana maybe. Like they're both very much trying to compete for like a similar, I don't know. I think they're trying to compete in like similar grounds, right? So like I think that they'll probably, it's hard to like launch a new L1 in 2025, but yeah, I think like the way to try and value where Monad goes from here is probably looking towards like just app usage, right? Like are people using Monad?
Yeah, I mean, I think that's what it's going to come down to. And I think that's always the question of like, do you need another chain, right? Like, I mean, to a certain extent, like, a lot of this block space does kind of look the same, right? And I'm not saying block space is commoditized. I actually don't believe that at all. But, when you're launching a new chain, I think what really matters is like, what's your ecosystem looking like? Are people excited to build on your chain? Is the developer activity going up? Are you getting a lot of shots on goals on like an app that could actually start to blow up and bring people over? Like that's the stuff that matters at the end of the day, unless it's like a massive, massive improvement or like unlocks a new use case, which you could make cases for something like Mega ETH, maybe unlocking some new use cases. I think for Monad specifically, I'm not too deep on the ecosystem right now, but I think I might have mentioned this earlier, 42 Network, they're building on Monad. And I personally find them as one of the most exciting, I guess you can call them a decentralized compute network, kind of decentralized inference network, but they're really cool. You should go check them out. Read the report. I have a slide. And so that makes me bullish just because I know the team is super smart. And I know that they were looking at a lot of different chains and found Monad to be the one that suited them best. So maybe we'll get some really interesting projects over there that just look at the landscape and say, hey, look, this is for whatever reason where I want to build. Maybe it's a performance thing, maybe it's a culture thing, ecosystem thing. So yeah, I think it's still a little TBD on what's going to happen with that ecosystem. But if they can get some good apps that people are into, then yeah, more power to them. It'll gain some traction.
Yeah, I think like to kind of just put a lot more focus on that. Like I think driving away from like the culture of Monad to like the utility of Monad is going to be really important over the next year. Culture is great, super important for like attracting developers and liquidity. We're essentially just on this like roller coaster of like the value of culture decreasing and decreasing, right? Like, and I think that like today in 2025, people are starting to say like, hey, you need to like build something, have it earn revenue, and have a plan to deliver that revenue back to token holders. And if there is no like path to that, I think it's like very difficult for Monad to succeed.
But isn't that kind of a function of culture sometimes? Like you have a great culture on your chain, people want to build there, you have users who like the ecosystem, and then that generates revenue.
It's just reflexive, right? Like when culture is good, it's good, but when culture is bad, then like what's the backstop?
I was a little surprised on this. I thought because of the culture that they had like cultivated, like I thought NFTs were going to be a big hit. I thought like meme coins were going to be a big hit, right? That might have been just me like maybe mid curving and trying to play like a new ecosystem launch. Haven't done that too much, but like I'm deep in the just like know the Monad team pretty well, and like knew kind of like the cool memes and like the mascots and everything, and I thought I was gonna play that pretty well. We saw like Chog do pretty well. I think it was heavily sniped, and then if you didn't get in the first couple minutes, then you was pretty down only. But I thought that was gonna do well. But what I think was really cool was seeing like the number of apps that they launched live with was like 70 plus apps. Now, probably about half of those were just like legacy Ethereum apps. Like right now, like Uniswap, Morpho, Euler are all EVM, just like legacy apps. Those are like the top 3 in TVL right now. But we're seeing Curvance is like a Monad native lending protocol at like the 4th or 5th TVL protocol. So I think that's pretty interesting. And then just like kind of rounding up like what the apps are on, because I agree with you. I think they do need a killer app in today's landscape of things to bring people to that chain. You're not just going to be because you have cooler tech. You got to prove, what does that cooler tech, what does that more performant tech actually do, and what does that bring as a use case. And right now, one of my favorite apps is this app called Bro.fun, which is just like this little like Pong game where you're just playing. It's kind of like a like one of those gambling things that you see on like the Plinko dropping games or whatever, but you're just shooting. You basically have like 6 cups. You pick a random one, and then you shoot it in. There's 1 death cup out of the 6, and like you get like every time you make it, your like money goes up like a couple like percentage points or whatever. And if you hit like 4 in a row, you double or something like that. So that's pretty fun. They got a couple other consumer ones that I'm pretty excited about, like Rare Bet Sports. Daily Fantasy is pretty exciting, which like as we see just like prediction markets and gambling of everything, like maybe might be a good way. I also think like the Privy connection to every single app with that partnership is pretty powerful, because it just like lowers the barrier to entry for non Web3 people, right? We still have to see we still have to see these metrics grow over time, and I'm hopeful that they will. And so yeah, but I agree with you that they need some like killer apps, and was interesting to see like the culture side of things, which is just like what we're used to with NFTs and meme coins kind of being the easiest thing to see. That wasn't as powerful as I thought it was going to be, which isn't necessarily a bad thing, right? Like now they just have more of a spotlight on like real relevant apps, right? I mean, we saw like Solana thrive on meme coins, and then also like it was kind of like their demise was meme coins this year. And now they're kind of coming out of that, they kind of bottoming out, and now meme coin volume is only like 5% on Solana today. And speaking of Monad on Solana, like the Mon token was brought over Solana day one and did a ton of volume. So like it might not be like a necessarily bad thing that like the what we put as like what the value of the culture, or the easiest thing to value culture, wasn't necessarily there. But that, yeah, like I said, I don't think that's necessarily a bad thing. And now we just need to see some apps that are in the pipeline that I'm pretty excited about, are like the perp dexes, right? I think we've always heard that they're going to have these powerful perp dexes on the L1, and still no one's really done that. I think we've seen Solana struggle in that conversation, especially when you compare it to Hype. You're seeing Aster, Lighter, Ostium, and then that new one that's launching on Mega ETH 2 that's going to have equity perps that I think is going to be pretty powerful too. So I'm excited to see that traction and see like what that actual like metrics compared to some of these more app chain specific perp dexes, and seeing what those do. So I'm pretty excited for those to go live and see where those go. And then like you said, from there, just like facing that uphill battle. But basically my thesis is like trust in the team to do that. But yeah, agree with you that they need to see some killer apps, and they have a lot of shots on goal, like Chris was saying.
Yeah, and I think kind of coming back to the culture point, it's not just the culture of the users or kind of what's aggregated around there. It's the cultures of like the builders and how the team supports the builders as well. So I don't really know too much about that, kind of like the inner workings of the developer community there. But if they have a strong developer community, that's pretty bullish. I always view developers as like a leading indicator. Like if a ton of people are building on the chain, they're excited about it, like that's a really good indication. Like that's exactly how people caught Solana, right? At like $9. They were like, everyone was saying the chain's dead, whatever. And then you have all these devs building on it and all these people that are super hyped on that side of the equation. And then the other side of the equation kind of fills in. So maybe Monad would be something like that. Matt, do you have any insight into their developer community?
Yeah, so a lot of people were saying how well the launch went from a developer perspective, right? Like there was no chain halts. Everything went like pretty smooth. Transactions were landing. And so like the developers were pretty bulled up on it. And you're seeing like the Fastlane guys come to example, like they're killing it. They've gotten they're going to be your go-to liquid staking option on Monad right now. And I think that's they're kind of like an early Jito in my head, just to put like a parallel for over. So if you have any Mon tokens, like not financial advice, but that's probably something that's pretty easy to airdrop farm, as they'll probably have a token in the future. But yeah, I know from like the Monad developer community, they really focus on it. There's also like a lot of, I think they had there's like 40% in ecosystem incentives laid out that are like technically like unlocked, not circulating, but like 2 to 3% of total supply is like already committed to their incentive campaigns going on right now, and it's called like Monad Momentum. So like some of these apps just have like boosted rewards to go and swap on Kuru or some of these apps that are live or like Fastlane boosted APR and stuff like that. So yeah, there is a lot of incentives going to the developers, which I agree with you is the right way to get people to come over and build their apps. And the like best thing about Monad is the EVM compatibility. And it's like, I'm not a developer, but like it's like 2 lines of code, probably more than that. But like it's on the grand scheme of things, it's not a lot to port your app over from an already existing EVM chain. And so I think they're going to get a lot of builders in that perspective. And yeah, I think as like privacy has come back into the forefront, kind of like these like cyberpunk ideals that crypto started with, and Monad being that decentralized EVM option, kind of has that. If you're still like, if you're a founder and you still believe in like the decentralization, central resistance, all that stuff wrapped into one, kind of like Monad is the answer there when you're comparing it to other options, and kind of and yeah, I think like they will slowly over time compound and grow and potentially be kind of like this next cycle's runner. But yeah, we could kind of like kick it off from there. Like where I know it's like a hot topic, right? We just saw a debate yesterday, I think, with like, are L1s overvalued, and kind of like, and then also kind of say like, where kind of are we in the market, right? I think we're sitting at Bitcoin crossed over 90K, bottom at around 80-ish. Ethereum's at like 3,100 right now. Solana's at 142. So we kind of see maybe like a convincing bottom. But like curious what your guys' thoughts are on just like general crypto markets. We don't have to get too macro. That might be outside of our pay grade, but like the do we need to see some of these price to sale ratios, as people are saying, come down before we can kind of enter into this next bull market? I know this bear market was only a couple months, but is that overplayed? Are people looking too much into the fundamentals? And then we can, yeah, let's start there. Like, what do you guys think? Like, do prices need to come down to get more attractive to the next marginal buyer, or is this just a time of pain where our portfolios are down and we're like thinking like, why are these things valued at certain multiples?
I mean, I think there's a couple of things here, and I think like one of the biggest ones is just the fact if you zoom out outside of the crypto industry, like there are other markets where you're getting way better returns for way less risk. Like Google's up 100% this year, right? Like you can be investing in these companies like, major companies in the stock market and generating like really good returns. So why would you go mess around with crypto and these places that are like super risky, and you should be getting like really outsized returns, but you're clearly not right now. So I think from a flows perspective, it's just there's not a ton of money entering the system that wants to speculate on these things, period. So you can say that's a price to sales thing. These things are overvalued, whatever. I actually don't really think that's the biggest thing. I really just think like zooming out, it's just not that appetizing to come in right now. And like, what's going to change that? I don't know. Like, of course, if prices go down to a certain point, there will be like marginal buyers, hopefully, who step in and are like, this looks attractive now. But yeah, not exactly sure what that catalyst is. I don't know if Corbin, Sam, you have opinions there.
I don't know what the catalyst is. I think that like this debate is definitely a sign of the times. Like we don't have anything more interesting to talk about than like rehash is block space a commodity. The answer is obviously not just like yes or no. It's definitely not no, but it's definitely not just yes. I mean, like some block space is a commodity, right? Like if I just fork Solana, and then yeah, that's a commodity, right? But I mean, I think Ryan Watkins put out a very good tweet on like essentially all of the things he identifies that like make block space interesting, and it comes down to like the quality of the capital, the quality of the talent, right? Like, I mean, like the specifications of the chain itself. But ultimately, like, I think it's very hard to compare to blanket state that like all L1s are like fairly valued or overvalued or undervalued, right? Like it's kind of like comparing apples and oranges, because the way that we value Ethereum today is very different from the way that we value Solana, and they'll be very different from the way that we value like Mega ETH, for example. So I don't know. The best way I look at it is just say that like these L1 tokens are all competing to be money, right? And now the argument is starting to shift a little bit more for like ETH, for example, to say like, hey, like we want to like accrue some value, and like we want you to like, I don't know, redefine your economic relationship with the L1s and with apps, because clearly they're the ones who are controlling the fees and the users. And that's a very difficult thing to do because there's trade-offs, right? Like you don't want to disincentivize apps to build on you, but you also need to incentivize the validators who are earning the tokens to continue like validating the network and keeping it decentralized. So I don't think that there's like a clean way out of this debate. I think it was very easy to just write off these tokens as money. And now what like that we're like 7 to 10 years into like this whole L1 experiment, if you want to call it, people are looking for some like value back, which is fair. Like we're at that stage, I think, in crypto where it's like, okay, like let's see some like productivity here. Like let's start to make these tokens like let's start to make the valuations, I guess, more digestible.
I think one of the things that Santi pointed out that I do agree with. I mean, I think overall I'm kind of more in Hasib's camp and like the way that he thinks about things. But when we think about the crypto industry and like why people are here and what the actual activity that's going on chain is doing, like a lot of it is trading, right? Like and speculation, and that has been like a killer crypto use case. But if you take that all the way down, it's like okay, well, we're speculating on tokens that are all speculation, and then what's actually underneath all of these things, like we have this infrastructure that's supporting this speculation, and like so once the speculation dries up, like all of this stuff dries up with it. Like I know the Sunny wrote a really great report on this, pointing out in Solana's ecosystem all the dependencies and interconnection that basically supports the speculation, the meme coin trading on the network. So I think it's not even just looking at like, hey, how much of this is speculation versus how much is this real use case? It's also how much of these real use cases are just supporting speculation as well. And what does that look like when speculation dries up? How many different parts of this industry does that affect?
Probably most of them, right? Like I think even our like the best apps like Hyperliquid, like 90% of volume is driven by Bitcoin. And Bitcoin is just an incredibly reflexive asset. So I think that that's like a reckoning that like a lot of these L1s have to like come to terms with, right? Like, and I think that's why like I'm very interested in like, and I don't think you can say that block space is a commodity, right? Because like there's purpose built chains, like there's there's different like use cases for different block space, and I think that's the most interesting thing to discuss, not just like copy paste a PE ratio across ETH, Sol, and like other L1s, and just blanket call them overvalued, because they are still very aspirational, right? Like that's the industry we're in. It's all very aspirational. So I think it's fair for things to trade at like these massive premiums. I think we're getting to a point where, as like we mature as an industry, we need to be driving value back to tokens, and we're not really seeing that today with the L1s.
Yeah, and I'm not even sure if it's as much of an argument about is block space a commodity. Like I think that's a separate argument totally that people have. But it's also just like where is the value going to accrue in these systems, and is too much of it accruing like based on current valuations at the infrastructure layer versus the app layer. And as Santi's talking about, aggregators always like once tech really develops, aggregators are the one that accrue the most value. So like you look at something like Google, like obviously accruing a ton of value, Facebook obviously accruing a ton of value. And is the better trade just to invest in this app layer stuff and eventually kind of see that switch where the infrastructure comes down and really good apps start to get, like valued higher versus I think Hasib's point was more around like, you can't even, these are more so like cities and states and like the way that they function. And, like eventually, basically, you will be able to turn on a switch once you grow to a certain amount of point. Like, so like Ethereum will be able to accrue value because they have that ability to kind of like turn on the tax system and tax higher in the same way that like any sort of nation would. So I think like that's more the debate that was going on there. And I think there's good points on both sides. And I think it does uncover just the underlying like, hey, what is being built on here? Like, where is the value on the app side? Because that's what I think a lot. Like, I think underneath it all, it's just people being like, oh shit, like, why are people using this? Like, what are the apps? Like, can we get more app activity going on here? And I think that's also because tokens are in the dumpster, right? Like, when tokens go way down, you start to question, like, what are we doing here? What's going on?
I also
any
didn't
thoughts?
watch the full interview.
Yeah,
Sorry,
I
go
didn't
ahead, Corbin.
watch. I didn't watch the full debate or anything, but I saw some clips. I think it's. I do agree. Like most L1s should probably go to zero. Like just the sheer amount of unlocks coming with for projects that aren't providing any sort of value probably means a lot of the space is going to experience heavy liquidation. That being said, I don't think you can just like slap a PE ratio on on a L1 and say and determine whether it's overvalued or not. I mean, it took markets decades to come up with the valuation systems that they have now. Like I think like Benjamin Graham, like that, evaluating a stock based off free cash flows was not even a standard practice in the stock market for a long time. And then it was popularized with Warren Buffett and Benjamin Graham. So I think we're going to have to come up with some of our own metrics that come up with a consensus on them. But overall, I think we're a long way from actually doing that. And throughout history, just markets move on stories more than cash flow. I mean, in the 2000s, it was the but that gave rise to real businesses, which also gave rise to AI. But people weren't really you couldn't have really predicted the AI story without the AI boom coming first. So I think there will be other stories that happen within crypto that people really like, and those stories will drive booms that do drive real value. But we're kind of for the L1s, we're kind of in the 2000 after 2000 .com crash, where people are struggling to value them. Like, oh, maybe if VCs got in super early with a good allocation, maybe this isn't a good alternative money. Maybe I want money that's already fully allocated and decentralized, and the counterparty risk is super low. So it's just like there's a massive, and it's super reflexive just because people are valuing these as monies. Like you could argue, oh, the L1s are going down because they're losing the monetary premium. But you could also argue actually because they have a monetary premium that they're being devalued, because according to Gresham's law, good money drives out bad. And if you're selling money if you're holding money that has a heavy supply overhang, you're obviously going to trade it for a better money that doesn't have a super high supply overhang. So yeah, I think it's just going to take a while. I agree that most L1s are overvalued, but it's going to take a while to figure out how to properly value them. But that's going to be for people like us. So I'm excited.
Yeah, we got to come up with some metrics. I think RAV was kind of like a good step in the right direction, but truly understanding like how we value these is going to be interesting in the next 5-10 years. But as we wrap up this section, a year from now, ETH, Sol, and or neither, do you see a all-time high for those two assets a year from now?
No.
On both?
I don't think so. I don't think so.
So you're a believer in the 4-year cycle?
No, I don't think it's a 4-year cycle thing necessarily. I just think we're going to have like maybe a return to like Bitcoin, or we're going to like see like new interest in the application layer, right? Like apps are generating like 80% of fees or something. I think that like we need to see L1 vows and app vows invert a little bit before we come to like maybe this conclusion like, okay, like let's not value L1s based off their fees.
Dude, I have no idea. I have no idea. I don't know. Yeah. I mean, I just like a year is so far, especially when there's like this much uncertainty in the market. Like, I mean, Bitcoin could be at 150K or at 75K. I don't know.
Yeah, I'm bullish. I think ETH will be at new all-time highs in a year. I'm not sure about Solana, just because Solana is so dependent on right now on like they've tied themselves to Rev, which has benefited them a lot, but it also hurts them. I think if Rev isn't good, where Ethereum has more like narrative support, and the narrative right now I think is, or it was, and it could come back, is the institutional side of crypto. And I don't know if Solana has as much part of that narrative. And I think because ETH is like has positioned itself, or is being, the narrative around it is that it's like a money and institutions are coming on chain. If you get into a scenario where like the Fed chair changes and there's a regime change at the Fed, and then you have risk assets outperform, you have AI outperform and Bitcoin outperform, and Bitcoin is pretty much just acted as a call option on the Fed, on a hawkish Fed, and I can see ETH doing really well too. but I think it's going to be a bumpy year for sure.
Yeah, no, it's kind of a trick question with Solana, right? Because there's the issuance and supply issuance that they have, and we already saw an all-time high this cycle in market cap, and we did see what in price, but that was probably purely driven because the president of the U.S. dropped a meme coin and drove the price up to $295. So it's pretty tough to follow that up with an even more bullish event for sold the asset. But yeah, it'll be interesting to see if. Yeah, I probably would lean on yes for both. Obviously, I think very biased. Once again, non-financial advice, but I think I would agree with you on what you were saying, Corbin, about just like I think going into midterms we'll see a bullish economy, and hopefully token prices follow that. But let's change gears a little bit and wrap up with something that happened today, and just kind of like launch pads in general, and what we're seeing from like decentralized capital formation. So earlier today and yesterday, Jupiter launched their DTF platform, decentralized token formation platform. That is basically their ICO platform. And their first token they went with was the WET token, which is the token behind the Prop MM Humidify, which has dominated DEX volume on Solana ever since launching in June. And today they're sitting about like 50% of DEX volume, mainly quoting or pricing the Sol USDC pair. They're also doing some other majors like Bitcoin, Mon, Zcash. They're also doing, if we don't have enough time on this pod to talk about how prop MMs work, but basically they're sitting in between like a just traditional market maker club infrastructure and like an actual like Radium or Uniswap DEX AMM perspective. But we saw the like whitelist almost do well, and then we saw like the Jupe stakers have a allocation to it, but then their platform was first come first served, got botted pretty heavily, and I was sitting there trying to get in, and even I was there for a second, and it was the whole allocation was taken over. But as this is also going on, we've seen MetaDAO do really well with all their launches. We've seen Umbra, Avicii's doing well, Solo's doing well. I'm pretty excited for like the Ranger Finance, and then they're also competing with Metaplex Genesis and another ICO platform that is pretty similar to what Jupiter's platform allows. And then you're also seeing Pump.Fun kind of lean into this with like Dev.Fun and Biddle, lean into like more legit corporate, whatever you want to call it, ICO 2.0 kind of platforms. And like curious what your guys' thoughts are on what's the best place if you're launching a token today. Do you think this is the best place to go? Should you still lean into like the traditional VC route and Geico and raise money and just kind of have like a normal token offering? Or what do you think like the lifespan of launching a token and the state of ICO platforms looks like today? Or is it better to go through like an Echo or some of these like more centralized platforms like Coinbase now?
I think that we're seeing like the launchpad stuff like maybe start to get a little bit commoditized. I don't know. I don't have like super deep thoughts on like the WET token specifically. I just think that we're seeing like very marginal differences in like the nth launchpad. Like I think MetaDAO was pretty interesting, right? Because it kind of like fundamentally changed like how founders run their projects. And I think that like and I think that's the correct direction to head in, is to like do something very different from other launchpads, right? I just don't know what that is for Jupiter. So I can't like definitively say if I see like a bullish future for their launchpad or for Meteora's, for whoever's. I like MetaDAO's, but yeah.
Any other thoughts?
I'm pretty unaware of what happened with WET, but I just heard Sam mention MetaDAO, so I'm like, hell yeah. I do like the MetaDAO launchpad. I think the model is pretty good. I enjoy I'm not like really too sure on futarchy and like the practicality of it, like whether you're going to have these people actually trading these markets, considering governance is already so low participation anyways. But I think like the model of having decisions whether to like release funds at a certain time is pretty cool. Again, not sure if it's like 100% the right way of going about things. Sometimes a company might just want to be able to do what they do with their funds, right? Not have to run everything by to be able to unlock more. But I think it's an experiment that is definitely pushing the industry in a more interesting direction. You want to talk about MetaDAO, Sam? I like MetaDAO.
I like MetaDAO. I think like there's a certain type of founder that benefits a lot from this sort of like ownership coin model where It's very crypto aligned. It's very much like giving power back to the token holders and like the democratization of finance. It's all in line with that. I just think there's a lot of founders that are cracked and that are really good at their job that probably don't want a bunch of token holders up on their business, which is valid. Crypto definitely caters to like this, like anybody can launch a company. And so I think that we have like a number of projects that would benefit from like converting their tokens into ownership coins. I just don't think that this has to be like, I don't think every project needs futarchy. Like I think there's a lot of founders that are very good at what they do and they're very capable and they don't necessarily need token holders like meddling with their business. But I think it's just like, it kind of depends on what the project is, like who the founder is, what their experience is. Yeah, like I don't want Jeff turning his business into a futarchy. Like, keep Hyperliquid safe from profit. But there's a lot of founders that aren't Jeff that I would love if they used futarchy to run their like token minting, burning, and distribution.
Yep, no, I agree. I think the PMF that MetaDAO's found is like the investor protection that you get, and like the founders of these companies can't just like run off with the treasury. Which I think is pretty awesome to be able to just like deploy into some of these like smaller market cap tokens and trust that they can't just like run off of the treasury because they only get like a certain stream to them every month and deposit into their wallets and stuff. Something else that I think like Jupiter will do well, right? I think Jupiter is like a crack team and has obviously like built like great products on Solana before. What they've done or what they did in this, what they're doing is highlighting and having like a lot of transparency around the wallets of each just different allocation, right? So like the foundation has a set wallet, you could track it and it's very like clear what that one is. The team wallet is like very clear. So every single like allocation wallet is very like clear and transparent. And so I think that's a step in the right direction. And I think they'll do well in the future. They're already saying they're going to redo the like public ICO part of this Humidify section because of how heavily botted. So I'm still rooting for them and pretty excited to see just more capital formation come on chain. And from a decentralized perspective. So excited from there. But if there's no other thoughts on that, we can kind of wrap with what are we doing on chain?
I'm doing some prediction market trading. And apart from that, I'm sitting in Bitcoin and like a couple select alts, but not much interesting right now.
Yeah, I was not doing any trading for the past couple of months writing the state of AI, but now I'm back and I'm playing around in the trenches a little bit. Got a couple low cap Ponzi's that look good. So let's see how that goes.
Corbin?
I'm running a neutral trade here where I'm leverage long Fartcoin and leverage short MSTR. So
Interesting.
The short on MSTR is just insurance on my livelihood.
Did you call that a neutral trade?
It's a neutral bet. Look, what do you...
We should have led with that.
Yeah.
It's a new barbell. New barbell just dropped.
Yeah, long degeneracy, short sailor.
Yeah.
I like it. I guess, I'm playing around with these ICO platforms, right? Messing around, looking into like the micro market structure. I think is pretty exciting with these prop AMMs. We saw Solana USD pair like do more volume on Solana than Binance for the first time. I think that's pretty interesting. And playing around in the Mod ecosystem, playing that Pro.fun game and playing with some of the apps there, and pretty excited about that. But with that, it's been I'm glad we're back in your guys' inbox after a couple like hectic weeks. Hoping to get like more a scheduled cadence in the new year, but hope everyone has enjoyed this episode. As always, this is not financial advice. Do your own research. You can do your own research at Messari.io. Go look at all of our reports and read up, especially the state of AI. I know Chris spent a lot of time, and it's one of the best, most in-depth AI crypto research that there is, and we'll catch you guys here in a couple of weeks. And as always, do your thing, like, subscribe wherever you're at, all the normal podcast stuff. But that's a wrap. See you guys.
See you.